Hey everyone, hope you're having a great day, and welcome back to Whiteboard Invest Crypto News. Let's dive straight into today's top stories shaping the financial and cryptocurrency landscape. First up, we have the latest Bitcoin price update, with BTC currently trading at $61,000 following recent market movements. Next, despite ongoing trade feuds, a survey shows that Chinese firms remain committed to the U.S. market, indicating resilience amidst geopolitical tensions. And U.S. spot Bitcoin ETFs have seen $31 million in net inflows after a streak of outflows, signaling renewed investor interest in cryptocurrency ETFs. Moving on, Ripple CEO criticizes SEC Chair Gary Gensler, suggesting his policies could impact the upcoming U.S. election. Additionally, Gensler remains ambiguous about the launch timing of spot Ethereum ETFs, but assures the process is progressing smoothly. In other news, speculation mounts over whether former President Trump will participate in the Bitcoin 2024 conference, adding political intrigue to the crypto space. Lastly, a warning emerges from a lawyer suggesting UAE regulations might lead to a crypto payment ban, highlighting regulatory challenges in the Middle East. All right, let's dive deeper into the details of each of these stories right now. Today, Bitcoin is trading at $62,000, showing a slight recovery compared to the range of $61,400, $61,500 observed yesterday. This uptick marks a welcome reversal after recent declines. The market sentiment appears cautiously optimistic as Bitcoin attempts to stabilize around key support levels. Looking forward, investors are keenly watching whether this recovery can gain momentum and push towards higher levels. Key resistance around $62,500 will be critical to watch, as a breakthrough could signal a potential retest of recent highs above $63,000. On the downside, maintaining support above $61,000 will be crucial to sustain bullish momentum. Overall, while short-term volatility remains a factor, the current price action suggests a tentative bullish bias with potential for further upside if key levels are decisively breached. All right, let's dive into the latest news from the finance world. JPMorgan Chase is saying the Federal Reserve overestimated a key measure of their income during their recent stress test. This led to an underestimation of their potential losses in a severe downturn. The measure in question is Other Comprehensive Income, or OCI, which includes revenues, expenses, and losses, not part of net income. JP Morgan thinks the Fed got it wrong, meaning their actual losses could be higher than projected. They even issued a late-night statement about it. This miscalculation could delay their share repurchase plan. From a crypto investor's perspective, this shows how opaque and complex traditional banking regulations can be. Even huge banks like JP Morgan struggle with the Fed's calculations. This lack of transparency isn't an issue we face with blockchain and crypto. Blockchain offers transparency and traceability, which is a major advantage. This incident also highlights the potential risks and uncertainties in traditional finance. While the Fed's stress tests aim to ensure banks can withstand economic shocks, such discrepancies can shake investor confidence. In contrast, the decentralized nature of crypto and the security protocols in many blockchain projects offer different stability and trust. It's worth mentioning that other major banks like Bank of America and Citigroup have had similar issues with the Fed's stress tests before. This isn't a one-off problem. It questions the accuracy of these tests. So, what's the takeaway here? For me, it reinforces why I'm passionate about crypto. The transparency, decentralization, and innovative technology present a compelling alternative to traditional finance. While there are risks in any investment, the potential for clearer, more reliable financial systems through blockchain is worth considering. We're talking to some interesting news from the traditional finance world about Sweden's central bank, the Riksbank, and their recent decisions on interest rates. So here's the scoop. The Riksbank has decided to hold interest rates at 3.75%, but they've changed their outlook for further rate cuts this year from 2 to 2 or 3. Riksbank Governor Erik Tadane mentioned that while the inflation outlook is improving, particularly with inflation expectations and wage growth, their forecast isn't set in stone. They'll adapt based on incoming data. Now, why does this matter for us in crypto? Well, this situation highlights the complexity and opacity in traditional finance systems. Even major banks like the Riksbank have to navigate uncertain projections and regulatory nuances. In contrast, the transparency and predictability of blockchain technology offer a refreshing alternative. The Riksbank's cautious optimism is driven by signs of cooling inflation and stable wage settings, which contrasts with the regulatory uncertainties we often face in the crypto world. However, their approach of adapting to new information is a valuable lesson for us. In crypto investing, staying flexible and ready to respond to market changes is crucial. Moreover, the potential risks mentioned, like strong demand pushing up domestic prices and global supply shocks, are reminders that both traditional and crypto markets can be volatile. The key takeaway here is the importance of resilience and a long-term perspective. So, for us in crypto, this news from the Riksbank is a reminder of why we value transparency and adaptability. It's also a call to stay informed and flexible in our strategies.
If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day.
Let's discuss a recent financial investigation involving Chinese underground banks and Mexican drug cartels. This case reveals a sophisticated money laundering network where cash is moved using innovative methods like dropping off money in cereal boxes and bags marked "Happy Birthday." From a crypto investor's perspective, this highlights the transparency issues and complexities in traditional finance that make it vulnerable to such illicit activities. Blockchain's transparency and traceability could help combat these issues more effectively. The global nature of financial crimes, which also affects crypto. Blockchain's decentralized ledger offers potential solutions to enhance security and oversight. The ongoing regulatory challenges in both traditional finance and crypto, emphasizing the need for robust compliance measures. Overall, this story underscores why blockchain innovations are crucial for building more secure and transparent financial systems. It shows how crypto can provide alternatives to traditional finance, offering greater integrity and innovation. Today we've got some exciting news in the crypto investment world. VanEck, a major fund manager, has filed for the first-ever Solana exchange-traded fund, ETF, in the U.S. This move is big because it signals growing institutional interest in Solana, one of the more innovative blockchain platforms out there. Now, why does this matter? Well, with the SEC already approving Bitcoin and Ethereum spot ETFs, VanEck's filing for a Solana ETF shows increasing regulatory comfort and acceptance of crypto ETFs in general. It's a clear sign that regulators are starting to understand the value and potential of these digital assets beyond just Bitcoin and Ethereum. VanEck's decision to categorize Solana as a commodity rather than a security is also significant. They argue that Solana's decentralized nature and its practical uses make it more akin to traditional commodities like gold or silver, rather than a stock or bond. But there's a catch. Regulatory clarity is still a big hurdle. The SEC's previous stance on Solana as a security, especially in cases like the Binance charges, adds a layer of uncertainty. This ongoing debate between whether cryptos are securities or commodities will continue to shape how these assets are traded and regulated. Overall, VanEck's move with the Solana ETF is a positive step forward for crypto investors. It offers another avenue for mainstream investors to gain exposure to Solana's potential growth and utility. As always in crypto, stay informed and watch how these regulatory decisions unfold. They can have a significant impact on market dynamics. Next, let's dive into a hot topic in the crypto world: Coinbase's lawsuits against the SEC and FDIC. They're alleging that these federal agencies are throwing up roadblocks, trying to stifle the growth of the crypto industry. Coinbase's move isn't just about legal squabbles, it's a battle for transparency and fair treatment. By filing FOIA requests and now lawsuits, they're pushing for clarity on how regulators are handling cryptocurrencies like Ethereum and activities related to them. The SEC's investigations into Ethereum 2.0 and the FDIC's pause letters to banks are particularly contentious points. These actions not only affect Coinbase but also set precedents that could impact the entire crypto ecosystem in the U.S. Now, whether you're bullish or cautious on crypto, this clash highlights a fundamental issue: regulatory uncertainty. Clear guidelines are crucial for any market to thrive, and right now, the crypto space is navigating murky waters. As investors, we want fair rules that foster innovation while protecting consumers. Coinbase's legal challenges could pave the way for clearer regulations, or at least force regulators to justify their actions more transparently. So, keep an eye on how this unfolds. So here's the scoop on some striking data on crypto security from Q2 of this year. According to Immunefi, the crypto industry suffered a staggering loss of $572.7 million due to hacks and frauds. This represents a significant increase from previous quarters, signaling a concerning rise in vulnerabilities within digital asset security. What catches my attention is the shift towards centralized finance, CFI, as the main target, responsible for 70% of the losses in Q2, compared to just 30% for decentralized finance, DeFi. This shift highlights ongoing security challenges within traditional financial structures in the crypto space, even as DeFi continues to evolve. Two major incidents, particularly the breaches at Bitcoin and BTC Turk, accounted for almost two-thirds of the total losses. These cases vividly demonstrate how a single breach can disproportionately impact the entire industry, shaking investor confidence and emphasizing the urgent need for robust security protocols. Ethereum and BNB Chain remain the most targeted networks, continuing a trend observed in previous quarters. With Ethereum facing 34 incidents, it's clear that these leading platforms, despite their prominence, remain susceptible to sophisticated attacks. In conclusion, this report serves as a wake-up call for the crypto community. As we navigate this dynamic landscape, enhancing cybersecurity practices and regulatory frameworks must take precedence. It's not just about safeguarding investments, it's about ensuring the long-term resilience and credibility of the entire crypto ecosystem.
All right, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.